Hey, welcome everybody. This is the Options Moneymaker Q&A session for February 24th, 2021. I'm Mark Dannenberg. Aaron Rumley is with me here tonight also. You'll hear from Aaron in a little bit as we start getting into the Q&A. So let me just kind of set the tone for this. The purpose for the Q&A is that we have a recognition that the majority of the people in our community of traders are at some level of their own learning. And we've provided a lot of programs to traders for them to learn how to trade options, learn how to trade futures. We've provided tools for traders to use to support their trading and find their own level of success. We're also very aware of the fact that frequently when you provide online learning, you provide self-study courses, that there is a need to be able to ask a question. So we carve out time every other week on Wednesday evening to make ourselves available. Usually it's the three of us here, myself, Aaron, and Michael. Michael is actually away this evening, but we carve out time to make ourselves available to answer whatever questions you have. So we are here to help you learn how to trade and then trade to earn. So the first part of that is extremely important. There are far too many traders in general that will immediately jump into trading, not really knowing what they're doing. I might have seen some stories about that recently in the news. Particular brokerage firms seems to have a challenge with traders not really understanding what they're doing, and they get lucky and then they get unlucky. What we're supporting and really teaching is how to trade, how to make this something that is a skill set for you, not something that is more like going to Vegas and you get lucky one time and you're unlucky another time. So we have built a variety of tools for that. We've partnered with New Cycle Trading and Analytics to help us build tools. So the Q&A is focused on whatever we support, whatever we do, whatever programs that we offer. We're here to help you understand how to most effectively use them. So that includes the adaptive entry system for identifying trends. That's the adaptive entry system that was built by New Cycle Trading and Analytics. The live trading room, most of you know, is for real-time trading and support. Aaron and Michael are the two primary hosts of the live trading room throughout the day. They are actually calling out the trade signals off of the adaptive entry system throughout the day, and they're providing a level of support which allows real-time traders to be able to ask questions and understand in real time how that trade was selected, why that trade was selected, when we have profits, when we have losses, when we should take ourselves out of the trade, when we should hold the trade, et cetera. So there's a tremendous amount of real-time learning that goes on in the live trading room, but if you have additional questions, feel free to ask those here. We provide a futures trading education course. It's mostly focused on learning the risk and reward of futures. Futures have a perception by a large number of people who don't have any understanding that they are a vehicle. You know, they're a derivative. You can lose everything you have in futures. Well, there is some truth to that if you don't really follow a set of rules. We preach a set of rules, we preach protection, we preach a conservative approach, and overall, we're very successful with our futures trading education. I'm going to go into that here in just a minute when I start talking about the personal trading plan. Personal trading plan is something that I'm going to show tonight. We have a lot of guests with us tonight, so I want to make sure that I do an overview of that. But the personal trading plan was built to track your personal profit performance. Trading seems to be one of those activities that people trade today, they had a good day, they trade tomorrow, they didn't have a good day, and they're on this constant emotional roller coaster and cycle of not really feeling great in the long term, and they don't really know where they're going. They never really know where today's performance fits into the big picture. So the personal trading plan was designed specifically to help you understand where your trading performance fits into the big picture, meaning if you continued to do what you're doing in the combination of winning trades and losing trades and winning days and losing days, and you're going to have both, if you continue to do what you're doing based on your run rate of performance, what could you possibly forecast to make over a 12-month period? This, in my opinion, is an absolutely necessary tool for every trader. It smooths out those emotional highs and lows. If you have a losing day, you plug it into your personal trading plan and you still get to see what your projected income could potentially be over a 12-month period. So I'm going to show you that tonight because we promote plugging your performance in on a daily basis. And I'm going to show you 3 different variations of what we track on the personal trading plan. And then we are all about options education also. Profit Builder Plus is an extensive deep dive program for learning how to trade options. If you are an existing options trader, but you're just not excited about your performance, not excited about how you're doing, you might want to sign up for Profit Builder Plus and kind of go through a refresher for some of what you know and new information that might help you. If you've never traded options before, Profit Builder Plus is a great place to start. We built the program starting at the beginning, meaning explaining the most basic terms like the strikes, what a strike is, how to choose an options expiration, puts and calls. We cover all of that. And then we go all the way into some of the more advanced spread strategies that you can trade. We also talk in the Profit Builder Plus education program how to manage trades that aren't working out for you. All right, so questions about any of those, feel free to put them in the question and answer box now. Before we get to the questions, I'm going to quickly go through the personal trading plan. We think the personal trading plan is something every trader should have, and we think that it's important that you update your performance at the end of every day. So I'm going to do this. I'm going to start by going to our performance tracking. Now, Erin's here with us tonight, and she gets 100% kudos for building this tool, which essentially has resulted in us building a database of performance over a period of time. And it's going to take just a minute to load. That database of performance is allowing us to examine the performance of certain combinations of adaptive entry system signals as well as timeframes. So if we want to know what your average performance could be on a daily basis, if you took all of the adaptive entry system signals, which there are 4 of them, and you traded from 7 a.m. Eastern to noon Eastern, well, for the last 174 trading days, that combination of factors, taking all the signals from 7 to noon, has averaged just under $542 a day. There have been 45 losing days in the 174 days. You're going to average about 17 trades a day trading during that time frame, and it's just under a 73% win-loss ratio. So we have all of this data, and then we built this field down here, which allows us to do research. If you asked me, geez, I can only trade from 8 to 10 every day using Eastern timeframes. I can plug in 8 o'clock as my start time, 10 o'clock as my end time, and I'm going to give you a reasonable idea of what to expect from trading during that time frame. Now, we all know that based on the last 174 trading days, that doesn't guarantee anything going forward. But the more data that we collect, the greater the level of integrity this data has, and it just allows us to help you get started. We always promote education first, and then we promote a trial basis, which means you trade in sim mode. If you're trading futures, that you trade in sim mode, or you do paper trading if you're trading options, for about 30 days until you kind of get a feel for the flow, you get a better understanding of the entry signals, and you start to build some of your own performance credentials. Once you get through 30 days of sim trading, you're going to have a good idea of whether or not your run rate is reasonably similar to the run rate that we've shown for the last 174 days. And even if it's not, what's most important is what your absolute run rate is. So one of the things that we do throughout the day is Erin does a really great job of making sure that all of the trade detail is entered on a daily basis. So we built this tracking tool spreadsheet basically. And what we do is record the time of each trade, whether it was a short or long, and this is all based on NASDAQ 100 futures. That's what we're primarily focused on during our live trading room session. Whether we're short or long, and it's on a 5-minute chart, what the strategy was. M is for momentum strategies, T plus is trend continuation, C is consensus, and T is trend. So we're going to, and F is a fractal. So we're going to record the strategy, and then for each trade, we're going to record on a points basis what our profit or loss was. Each point has a $20 value to it per contract. So if we have 10 points of profit times $20 a point, that's a $200 profit. If we have a 20-point loss times $20 a point, that's a $400 loss. So we record wins, we record losses, we even record the drawdown, meaning how much did it move against us before we actually ended up closing the position. So, you know, there are situations where here's one that moves 6.25 points against us, but then ended up giving us a 5-point profit. Here's one that gave us a 14.5-point drawdown, and then it gave us a 5-point profit. So we track all this detail. We actually track it from 3 a.m. Forward until we stop trading at the end of the day. Today, the last trade we took was at 3:26, and then we were done in the live trading room for the day. So we have all the detail of every single day since we started doing this, and then we summarize it in a daily summary. And we can see the total in any particular category that we want to adjust our research tab to. But there are 3 primary categories that we evaluate, and we plug their performance into our personal trading plan. And we do that so that our community can see, well, there are differences between choosing to trade 9:30 to 12 versus 7 to 4. There are differences if you trade all the signals versus trading only the trend and trend continuation signals, etc. So the 3 categories that we translate into our personal trading plan are 9:30 to noon, taking all of the adaptive entry system signals. That does not include fractals. That's the 4 primary signals. The second category we put into the personal trading plan is trading from 7 a.m. Eastern until we stop trading, which is generally sometime between 3 and 4 o'clock Eastern, but only taking the trend and trend continuation signals. And then the third category that we track, and we just started doing this at the beginning of the year, beginning of 2021, we track the actual time frame that the live trading room is open. It opens at 8:45 a.m. Eastern, and we close sometime between 3 and 4 o'clock Eastern. And we're taking all of the adaptive entry system signals plus fractals. So these are the 3 categories that we track. Now these 2 categories, 9:30 to noon and 7 to 4, we've been tracking now for about 7 months. And the 8:45 to 4 category, we just started tracking January 4th of this year. So we're going to track a full calendar year, but it gives you a good flavor for the differences that each of those categories can give you in terms of performance. So today in our 9:30 to noon category, we actually had 5 points of profit, and we took 12 trades. Wasn't very productive today, but we had some choppiness early on. I know I was trading through that, and it was a little aggravating, but it is what it is. In our 7 to 4, we actually lost 18.5 points, and we did 18 trades. And in our 8:45 to 4, we made 21.5 points, and we took 38 trades. So now we have, first of all, the detail. That's all summarized in the daily summary. And the next thing is we have our personal trading plan. So the personal trading plan was built so that we could plug in our performance every single day. And once we've plugged it in, it's highlighted in blue. So everything highlighted in blue is our history. And it takes all of our history and it will calculate for us what the average winning day is and what the average losing day is. And I'll say more about that here in just a minute. we can then use those averages, average wins and average losses, to forecast forward. So this is a 52-week plan, and we are 30. We're into 34th week of our plan. Sorry, we're into our 33rd week of our 52-week plan. And so what we want to do is to say, if we continue to operate at these same levels, these are our current averages, our current run rates. We want to now use those same values to forecast the balance of the year. And that's going to help us then understand what our profit potential could be for a 12-month period. So let's start by plugging in our numbers. This is the 9:30 to noon. And I'm going to put it in under the NQ. That's the NASDAQ 100 futures. We had 5 points of profit, and it's $20 a point. Now, our personal trading plan is designed to scale the number of contracts you're trading. You should always start with one contract when you're just starting out, but there's a formula in here I will explain in just a minute that will graduate the number of contracts so that you can accelerate your earnings without really doing any more work. We are at 3 contracts, so we made $300 for today. So that's 5 contracts, 5 points, $20 a point is $100, and then 3 contracts is $300. We had 12 trades at 3 contracts per trade, so it's 36 contracts in total. Now that we have our contracts put in there, we've accounted for the fees and commissions that we have to pay to Infinity in order to trade. I'm going to do the other 2 categories here, and then I'll come back and we'll evaluate the forecast. So in our 7 to 4 category, we had a loss, you saw, of 18.5 points. If I multiply that times $20 a point, and again, here we're trading 3 contracts also, times 3, we actually had a loss today of $1,110. And we did 18 trades, and that's times 3, so there's 54 contracts. And we're going to lock that in at 3. So we put 3 in the override, contract override field, so that if we do any research, it doesn't go back and change anything that's in our history. The history is locked, and all of our research is go forward research. And then the last category that we're tracking, now this one just started on January 4th. The other 2 started July 6th of last year. We did 21.5 points times $20 a point times 3 contracts. Today it was $1,290 of profit, and we traded 38 trades during that time frame times 3 contracts per trade, so it was 114 contracts. Okay, so let's go lock that at 3 in our contract override field, and now we're going to do our evaluation. So I'm going to go back to the 9:30 to noon category, and you're going to see that there's a significant difference between the 2, between the 3 different strategies. One is all signals, one is all plus fractals, one is just trend and continuation, one is 9:30 to noon, one is 7 to 4, one's 8:45 to 4. Okay, so we're 33.5 weeks into our 52-week plan. During that 33.5 weeks, there have been 57 losing trading days. During that 33.6 weeks, our winning day is averaging 21.75 points a day. Now that takes into account both the winning days as well as the frequency rate of winning days relative to the number of weeks in our history. So number of winning days relative to 33.6 weeks, and we assume that we're going to have the same win-loss ratio going forward. It may get slightly better, it may get slightly unfavorable, less favorable, but it is a real number, and that's what we want to work with. Our losing day average is minus 42.98 points. And again, that takes into account all the losing days as well as the number of losing days relative to weeks of history. So now I want to translate those run rate values. These are our real performance values into my forecast. So 21 0.75 and minus 42.98. Minus 42.98. Okay. So now we know what our run rate is for the first 33 and a half weeks. We still have a few weeks left in our 52-week plan, and we're forecasting forward for the balance of our 52 weeks the same as our run rate. We are capping our contracts out at 3 contracts. I'll explain that a little bit more in a little bit. But assuming that we don't trade more than 3 contracts for the balance of our 52-week time frame, our projected income right now is $130,683. That's in an account that started at $5,000. All we've done is started with 1 contract of trading. We follow the adaptive entry system signals from 9:30 to noon, and we just post the performance, whether it's a win, whether it's a loss. We take into account the winning days and the losing days, and it doesn't matter what the size of each is. All that matters is what is our down the road horizon target. So 130,000. So let's take a look at the 7 to 4 category. In our 33.6 weeks, same time frame, we've had 54 losing days. Our average winning day is 27.77, and our average losing day is 39.41. We're going to translate those into our future forecast. So 27.77 and minus 39.41. Now, the further you get out into the 52-week plan, the smaller the increments of changes are from day to day. Those were very minor changes. When you're first in the beginning of your plan, the first 30, 60, 90 days, the changes from day to day can be more pronounced. There'll be bigger wins changes, and there'll be bigger negative changes. But as you develop your plan and you get out past 3, 4, 5 months, that starts to stabilize a little bit. Here, we're going to stay at 3 contracts also. The projected income is $216,849. That's in an account also that has started with just $5,000. Okay, so we went 5,000 to 216,000. Now, just a word about contracts here real quick. We have 2 levels of limitation on the contracts. One is there is a margin requirement to trade futures. The margin requirement on each contract at Infinity is $500. Check out other brokers. There's some other brokers that charge as much as $17,000 per contract. We're trading at Infinity Futures. Margin requirement is $500. We want to make sure that the margin requirement for the number of contracts that we're trading does not exceed 10% of the balance of the account. And that value is set right here. You can adjust that to whatever you want in your personal trading plan. We do not want the margin requirement for the number of contracts that we're trading to exceed 10% of the total balance of the account. The other limitation is you just get to a practical point where you decide, I don't want to trade more than X number of contracts. If you put a big number in there, I'm going to exaggerate this. This is not at all what I would recommend. But if I were to put 50 contracts in there, well, the trading plan, let's see, there we go. The trading plan is going to graduate me up to 50 contracts, but not all at one time. I need enough balance in the account to cover the margin requirement of $500 times 50. I need enough to cover 500 times 50. And when it gets there, it will graduate me up to 50 contracts, and then it will stay there because that's what I said I would want to limit my maximum trading. And of course, that takes the projected income out to $1.4 million. Now I see it doesn't go back and change anything in our history. It only changes going forward for the next few weeks. So I think 50 is a ridiculous number, but I was just doing that to kind of emphasize the point. If you decided to graduate up to 5 contracts, you'd be jumping to 5 contracts tomorrow, and your potential income ups to about $270,000. I'm going to leave this at 3. I think that that's a very reasonable number, having started with $5,000 and growing to $216,000. Okay, so here is our newest plan where we started in January of 2021. We only have 7.5 weeks under our belt. We've had 12 losing days in 7.5 weeks. Our average winning day is 41.73, very different than what we saw in the other two. And our average losing day is higher than the other two also, minus 51.97. So I'm going to change our go forward forecast values to 41.73, and you see that the change is much more significant than what we saw in the other two. And I'm going to change our losing day to minus 51.97. I'm maintaining 3 contract max. You can see here that we just got to 3 contracts last week. We started with 1 contract, we graduated up to 3 contracts. And this is really a great exercise here to see. We actually, January 4th, started with 1. We graduated up to 2 contracts. We'd actually gotten up to 3 contracts at the end of January. We had a big losing day. I think that was the biggest losing day that we've had. So how did we address that? We took it in stride. The personal trading plan, once we plugged in our performance, said go back to 1 contract, which we did. And now we've graduated back to 2, and now we've graduated back to 3. And if we maintain a 3 contract max, we started discount also at $5,000, and the current projected income for 12 months by the end of this calendar year is $337,345. I think that number will change. I don't know if it'll go higher. I don't know if it'll go lower. I think we're too early in our 52-week plan to say that these are really solid run rate numbers. They are what they are for now, but that's why it's important to update your performance plan every single day and just use the forecast based on, input your forecast based on what you actually see as your actual performance. So that's the personal trading plan and how we track the detail, how we look at the summary, the daily summary, and then we translate that detail into personal trading plan so that at any given point in time, we have a reasonable understanding of what our projected income would be. Now remember, each of these accounts started with $5,000. So that's a pretty strong statement right there, up to 337,000 or 216,000 or 130,000. It's all depending on how much time invested in your trading, how much or what signals you're taking, and so that's the personal trading plan. So let me just finish this up so we can get to the Q&A. A lot of traders struggle with the emotional side of risk and losses, and that's why we really emphasize the personal trading plan. Aaron talks about it throughout the day, helps traders see the big picture. There are a lot of days where we might end up with a small profit number or even a loss number by the end of the day because we are tracking every single trade from 7 a.m. on to the close of the market day. But earlier in the day, somebody might have hit their profit target for the day, which their personal trading plan is telling them. If your profit target was 21 points for the day and you're done at 10:30 in the morning, you might have locked in 21 points. We might end up with a loss for the day. It's not that we are personally trading every single trade throughout the day. We are tracking all of this so that we can present to you a very realistic transparent picture as to what to expect. I know today was a good example that we finished reasonably strong, but the last couple of hours there was a lot of back and forth. We got stopped out a few times, and yet this morning at 10:15, just an hour and a half into the trading day, our trading day on the in the live trading room, we're at 40 points. So we didn't finish at 40 points for the day, but we had people who were stopping and they were done for the day trading. Trading should not be something that you just continuously trade that's open-ended. The trading plan helps you answer the question, when is enough enough? What's a reasonable profit loss target for the day? And what's the potential 52-week income? Now, I didn't update these numbers based on having just inserted today's performance, but based on yesterday's numbers, we have our personal trading plan performance showing a 52-week income potential of anywhere between 133,000 and 299,000. And I think that those are really strong numbers with each of the 3 accounts having started with just $5,000 and committing as little as 2.5 hours per day. That's the 9:30 to noon number. And just in terms of perspective, $78,500 is the median household income in the United States, according to the Department of Housing and Urban Development. So you can compare that to the number of hours and effort it takes to earn that versus starting your own trading business and focusing on really learning how to trade effectively. So learn to trade, trade to earn, futures trading education for learning the risk, options education if you want to learn how to trade options, the adaptive entry system, live trading room, personal trading plan. These are all the tools that we built to help you build a personal trading plan. All right, so I'm going to turn our attention to questions. And Erin, if you're here, you can help me with questions.
Okay. Katie's asking, what are my options to managing a losing trade?
Are you talking about an options trade or a futures trade? Futures trade, you don't want to mess with the trade until you really learn how to recognize when you should adjust the trade or take it off. Options trades, there are a variety of strategies for managing options trades that aren't working out so far, many of which we teach in the Profit Builder Plus options education course. There are ways to roll trades out. There are ways to layer in a short leg against a long call or long option and create a diagonal or calendar spread. There are a variety of very creative ways that you can manage options, but it's more involved and it takes more time to pay attention to those than it does futures. Futures, I don't really classify adjustments that we make as managing the position. Futures are about getting into the trade, have some history, which we have a lot of, on what our risk limit should be. Ours is 20 points of risk limit, which is $400 on the NASDAQ 100, $400 per contract. And our profit target is 10 points. So it's either going to hit 10 points, or we may insert a stop for 5 points to lock in 5 points of profit, or we're going to see a reversal if we were long and we see a short adaptive entry system signal. Then we take the position off for something less than a 20-point loss or less than a 10-point profit, and we go from there. I don't classify that as management. So when you refer to management, I'm thinking more about options trading.
It is the nice thing about trading futures and AES is that there's very clear exits based on the AES signals. And then, of course, we have our profit and our loss targets as well.
Yes.
Bill's asking, in the personal trading plan tool, the use of $5,000 in the account, would that violate the pattern day trading rule? So there is not a pattern day trading rule with futures, but there is with options. And in our personal trading plan that Mark showed earlier, the $5,000 account starting balance is for our futures trading.
You can trade options also, but if you're going to day trade, you have to pay attention to the pattern day trading rule. And we're not trading options extensively right now, so we're not tracking them in the personal trading plan, but there is a option, no pun intended, to track your options performance. And the numbers are very different. Starting with $20,000, you really need $25,000 in the account in order to be a pattern day trader. And not drop below 25,000. So probably more like 30,000 in the account to start. And then you have to decide what your maximum capital commitment is going to be throughout the time frame that you are trading.
While we're on that trading plan, as a business, Fred's asking, as a business, if you take out income, how does it affect the trading plan? Well, there's actually a column that we've put on there where it says funds plus and minus. So if you decide to withdraw, let's say, $8,000 from the account this Thursday, you would just put negative 8,000 in that column, and it'll still calculate how many contracts you should be trading. I think I gave it so it'd still be at 3. Yeah. So if you take out too much, that puts you below a $15,000 balance, it will adjust your contracts lower based on the percent of balance you have allocated in your personal trading plan.
Yeah, Fred, if you're going to use this correctly, there's a green shaded box up here in the upper left-hand corner that I didn't talk about, and it has a date in there of 6/30/2021. Well, I want to know what my 12-month, 52-week profit profit objective is, but I also want to know at certain benchmarks along the way, because if I'm a business owner and I think that I want to take some income out, I'm going to put in certain dates out here. So what if I wanted to take out $50,000 at the end of June? Okay, I would have been trading for 6 months. Well, I am putting the date, end of June, 6/30/2021 here, and it's telling me what the estimated account value will be at that point in time. So if I'm scaling up to 3 contracts, then I would not want to take out more than would allow me to still continue to trade 3 contracts, because that will still leave me on pace to have $337,000 potentially. So if I see, for example, that on June 30th, the forecast is 153,000, then what I might do is to scroll down to June 30 in my planning and say, listen, on the last day of June, I'm going to take out $50,000. Right? We just took out 50,000 from the ending 12-month balance, but it's 287,000 plus I took out 50, so it's still 337,000. So that allows you to take out the cash, plan when you want to take out cash, and still maintain your growth because you've capped yourself at 3 contracts anyway. Hope that makes sense.
Neil's asking, what do the yellow triangle markers on your price chart indicate?
The yellow triangles are divergent bars. So when it's printed below a price bar, it's referred to as a lower divergent. And let's see here. Got to
There's
scroll
blue all the
back
way
here.
on the left, yeah.
Yeah, there are blue triangles that are at the top of a bar, and those are upper divergent bars. We don't use divergent bars very much in our futures trading, but divergent bars are something that we've talked about in options education. It's essentially another technical indicator that suggests that when price action breaks through a upper or lower divergent bar, that you may be starting to see weakness in the current trend. So if we, excuse me, excuse me, if we were to break through, they don't all happen exactly that way. But if we were to break through, for example, this upper divergent bar, well, you can see then that we continue to move higher. The 2 prior divergent bars, we broke through this one, we moved a little higher and then came right back. And then we did break through that one, went a little lower first, and then we broke through that one. So it's just another indicator. It's not interpreted the same as fractals that we trade, but it is another indicator that we have on our chart that helps us recognize when the current movement of the market might be weakening.
And you'll hear Michael talk about it if you're part of the live trading room as well. He'll talk about wave counts, and sometimes if we have 2 divergent bars in a row, that could indicate the end of a part of a wave count. Michael and I will also talk about momentum trades that occur after divergent bars. They tend to have some nice movement to them. Bob's asking, can I make adjustments to the personal trading plan spreadsheet, such as column width, or is the sheet protected? It is protected, but on the instructions tab, for every tab, the summary, instructions, futures, it tells you exactly what the password is to unprotect. But I'm pretty sure that the protection allows you to adjust the column widths without having to unprotect it.
Aaron just protected the spreadsheet so I wouldn't screw it up. But we do protect it because there's a lot of very complicated and sophisticated calcs built into it. And if you're not really familiar with Excel, We just didn't want you to have a problem. So we protect it, but you're welcome to unprotect it and do whatever you want to with it. Bill is asking, will adaptive entry system work for trading SPX and SPY and the micro E-minis? The adaptive entry system was designed specifically to be adaptive to most anything that you want to trade. So if I looked at SPX, for example, when I'm trading options, I'm not going to use a 5-minute chart like we do on our NASDAQ futures, but I might use a 10 or 30-minute chart. So here I'm showing a 30-minute chart, and you can see the adaptive entry system signals are still showing. Now here on my options chart, I only have trend and trend continuation signals. If I wanted to print all 4 signals, I would just simply display consensus, display momentum, and then I have all of the entry system signals. So you can trade exactly like we're trading NASDAQ. When you see a signal to go long, you buy to open a call. When you see a signal to go short, you can buy to open a put. If you prefer to trade spreads, you can use those same signals. You can open a put credit spread. When you see a signal to go long, you can open a call credit spread when you see a signal to go short. But it works pretty much the same way. You just have to get comfortable with the signals and get comfortable with how much capital you're going to allocate to each trade, what strike you want to trade, what expiration you want to trade. And it also works for the micro E-minis too. Aaron, you want to talk about this? Michael's got a question about your 20-point strategy.
Yeah, I was actually pulling up my personal trading plan. I don't think I can send it to you. I don't think you're in a, but I could show it on my screen. Do you want me to take screen control?
Yeah, if you want to do that.
Okay. I wasn't quite ready, but I'm almost there.
Oh, well, I can take another question here.
Yeah, let's do one more question just so
Sure.
I can have it.
Fred's asking, do the signals appear on the infinity charts? No, Fred. So the adaptive entry system signals are built using the TradingView platform. TradingView is very robust, has a lot of bandwidth for us to use. And so what we did was we built using that as our foundation. When you sign up for the adaptive entry system through New Cycle Trading, you're going to then get an email from us with an authorization to download the adaptive entry system. And we just have to have your username on file, and we have to have given you approval. But then you're literally going to go into indicators and strategies, and you're going to select invite-only scripts. And when you select invite-only scripts, it's going to come up with the adaptive entry system. You click that and download it, and it will load right on top of your TradingView platform.
Okay, I'm gonna steal.
Yeah, go ahead, Aaron.
So you should be able to see.
I can.
My personal trading plan. So this is trading 5 days a week, Monday through Friday. Stopping once your first trade gets you to or above 20 points once you get to that point. So that means if you have 17 points going into a trade, you're still going to treat the trade the same, meaning that you lock in and protect your profits once it gets over 5. So you're out for 5 points and you started with 17 before that last trade. So you're at 22 for the day, or let's say this is the one that ran to 10. So you're at 27 for the day. Does not mean that you're going 17 into a trade and you exit for 3 additional points and you're done at 20. So just to keep that in mind. So this has been tracking since September 28th. And you can see in the 21 plus weeks. Did I update today's? I'm pretty sure I did. We'll scroll down. I did. In the 21 weeks that we have been trading, there has only been 9 losing days. Those are net losing days after commissions and fees. Some of those days were actually winning days, but because of the amount of trades, they ended up being small losing days. There you go, 5.9 points loss and 4.45, even though the profits were actually positive. Stopping at 3 contracts max. Again, $5,000 account balance, 10% of the account balance, and a 12-month forecast is $232,000.
That's pretty reasonable, Aaron.
I would say so.
Yeah, I think that's
especially
very,
because
very adequate.
A lot of these, we scaled up to 3 contracts here, but a lot of these trades, so 3 contracts, 15 total, so that's 5 total trades. Here's 4 total trades. So I know, I think it was yesterday, we were done before the 9:30 market open even happened. This is again starting at 8:45. I don't think I mentioned that, but starting at 8:45, trading till 4 o'clock, all AES signals and fractals.
So here, stay on there, Aaron. Mary is asking if the number of points is more than 20, how do you account for that in your plan for your forecast? If your actual number of points is greater than 20.
Well, you're recording what your actual is. Did I do? See, so I did some of these as formulas, so I didn't do it on a calculator. So this day it was 29.5 points, right? At $20 a point and 3 contracts. And so all of this is recording your actual profits and how many trades it took you to get there based on the current contracts that you're trading. And then this is what your average is based on 9 losing days per week. So I take these numbers and plug them in to my forecast. And with 21.39 being my average for the positive days, I'm losing 1 day every 2 weeks about, and then negative 8.69 on my losing days, and that's what's forecasted out.
Yeah, Mary, if we have days that we finish above 20, that goes into the actual performance, and then it factors into the run rate calculation. And the run rate calculation of our actual performance is then what we use to forecast going forward. So it doesn't really matter what the daily performance is. Whatever it is, it gets recorded in terms of total profit. And then there's a quick question in here from Jay. Aaron, can you scroll over to the right a little bit and show where you put in the contracts? So Jay is asking, is there a way to figure in fees and commissions in your spreadsheet as an additional expense? So we have fees and commissions already factored in. We make an assumption based on the commissions that we pay to Infinity, $4 a contract. And so when Aaron puts in round trip contracts in column V, it's calculating for us what the actual cost of trading is for that day. So if you scroll all the way to the left, then Aaron, you'll see that the $1,200 was her gross profit that day, but the actual net was $1,140. So that takes into account the profit and loss. So what we're doing is we're calculating run rates based on net after fees and commissions profit performance.
And there's a summary. So right here is my total gross total. Right here's my total fees that I've paid, and here's my total net amount as well. So it tracks in and also tracks your net amount weekly.
Let's see here. Jay's asking, it says new here. Well, thank you for being here, Jay. Do I understand correctly that 10% of $5,000, that's $500 per trade times 3 contracts, $1,500 of capital that you're using each day? If so, why not, after a few months of earning an additional profit of 30,000, why not roll that back into my working capital? Jay, we're giving you the tools to use, and we're teaching you how to use it. However you want to manage your trading business, and we definitely view trading as a business, is entirely up to you. You have the complete flexibility to decide when you want to take capital out, when you want to add capital, when you want to add contracts, how large of a maximum number of contracts you want to trade to. You have complete flexibility to make each of those choices.
We're showing a conservative approach for someone that maybe gets uncomfortable trading a lot of contracts. We're showing a very conservative 3 contract max and what that can do for you. You can absolutely go to 10 contracts and see what that does for your account if that's what you choose to do, if you want to scale up to that amount. But what we're showing is just a very conservative, very healthy return on $5,000 in a year.
I think you start with $5,000 and have that type of projected outcome for 12 months is very strong. And that's a 4th personal trading plan configuration that's different. It's capping out at 20 points. You know, I think the best way to say it is you stop trading after the first trade closes out and you have better than 20 or better points.
Yeah. You can see the balance is already at 91,000. Mm-hmm. That's already a very significant return in the 21. So we're about halfway through the year, 21 weeks. Little less than that.
All right, let's see here. A couple questions about options. TJ is asking, do you use in the money options? TJ, when I'm trading options, I'm generally trading at the money, somewhere between at the money, which is a 50 delta, and sometimes I'll go as low as a 10 delta. It depends on how expensive the options are and how much capital commitment I'm willing to make into that particular trade. So that is, I generally don't trade in the money options. At the money is better. I did an analysis several years ago and shared in the live trading room and showed a comparison that if you trade in the money options, there were people at the time who were thinking, you know, they should go to a 70 or 80 delta. And I did a comparison showing that versus using the same amount of capital commitment, but going out to like a 30 or 40 delta and just increasing the number of contracts. So the overall dollar risk was the same, but the opportunity for profit, even though I was trading a lower delta, always outperformed the in the money options. And that's because you've got more leverage with more contracts. And say I am holding contracts on a 30 delta put, as the price moves lower, the delta value of that option is going to increase at a much more rapid rate than the delta value on the 80 delta option. So that's a more involved explanation than probably what you were looking for, but that's generally why I prefer not trading in the money options. I'd rather go out of the money and leverage the big moves.
Stephen's asking, do we need to enter the contract override every day? I mean, you don't have to. I would recommend it because if you don't, and you decide you want to scale up your contracts, when you look back, it's going to look like you traded 5 contracts that day. It can change your amount, but if you lock it in, you know how many contracts you traded that day, because sometimes looking back, you might not know, okay, well, if I was at 5 contracts that day, did I take 3, or was I at 3 contracts that day and took 5 trades?
Yeah, it's just a way to lock in your history. And I think it's important that you do that. Deepak's asking, what are my monthly expenses for access to Infinity and personal trading plan and any other expenses? All right, so the futures education, of course. Aaron, do you have a link you could send to investor to?
Yeah, can you take back screen control?
Oh, yes. Here, Deepak, we're going to give you a link so that you can explore that a little bit more. But you have, if you want the full package, can you see that okay, Aaron?
Yes.
Okay.
Your chart, yes.
My chart, okay. If you want the whole package, you want the futures trading education. you want the personal trading plan. You want,
which is both our futures and the personal trading plan are just one-time fee. They're not monthly expenses.
I'm sorry. Futures trading education is a one-time expense. The personal trading plan is a one-time expense. And then the live trading room is a month-to-month expense of $395 a month. And the adaptive entry system is a month-to-month of $597 a month. The entire price structure on the monthly recurring expenses was, I think it was thoughtfully considered and designed to be equivalent to what you could earn pretty easily in 2 to 3 days a month. So you should be able to cover, and that's trading one contract. You should be able to cover your costs in 2 to 3 days a month. If you increase contracts, obviously less time, but it's pretty easily recoverable if you think of it as like a business person.
Yeah, Christian saying if you do the math on trading the 9:30 to noon, you're on pace to make $225 per hour and only work 50 hours per month. There's no better business. Think about that, $225 per hour sitting in front of a computer, pushing buttons and taking signals a 5-year-old can understand. Thanks, Christian.
Thank you, Christian.
Always for your support.
Let me see here. I'm going to go back to cover a couple questions we missed. Ahmed is asking, what's my opinion on GME stock? We don't trade stocks. We don't trade GME. We didn't participate in all of that chaos. I have opinions about it. I'm not going to share them here because it's not something that we do. David's asking, what's the best trading scanner for options trading? And when an option is heavily into the money, why do some options traders sell higher calls against the gain? So the best trading screener, we don't use a screener. We have a watch list of stocks. So again, it's not something we do here. There are a lot of questions that we could be asked, David, and we don't generally get into the ones that don't equate to something that we do. We don't use screeners. We have a watch list of stocks. Our watch list is actually right here. There we go. We have S&P 500, we have the Russell 2000, we have Amazon, Booking, Google, Netflix, Shopify, and Tesla. Those are our primary watch list. I don't have an interest personally in continually scouring the entire universe of optionable stocks, looking for something that might align with some profit target or some preset criteria. I prefer to be more familiar with the stocks that I'm trading. I can tell you that if I take Amazon trades, most of the time, I can grab 10 points of profit trading a 50 delta option. And that's using the adaptive entry system signals. So I think there can be some value in screeners if you're just starting out and you're looking for a way to screen and find good trades, but that's not something that we do. And when an option is heavily into the money, if you're talking about calls, for example, why do options traders sell higher calls against the gain? If you have a call that has a significant profit on it, at some point, it's possible that that profit could go away. But if you create a spread, so essentially you've legged into a spread, you've guaranteed yourself a profit on that trade. Like there's a portion of that profit that can't be taken away from you. But when the spread is constructed properly, when it is legged into properly, there is still additional upside profit potential. So when traders are doing that, they're essentially hedging their risk. They're deleting their risk entirely so they can't possibly lose. If the stock continues to accelerate, like a GameStop did, well, you might miss out on a big portion of that upside. But that's really not the game that I'm playing in. So we can leg into a spread, lock in the profit, and still leave ourselves exposed to the possibility of additional profit by doing so. And when done properly, you can eliminate all of the risk that you had originally on the trade.
Fred's asking, do you enter your trades on the Infinity Dome while tracking the trades on your charts? So yes, well, so we're looking at the chart for our entry. And then once the entry signal comes on, we're already ready on our Infinity Dome to place the buy or to click the buy or the sell market button to either go long or short, depending on what the AES signal is that appears. And then we're using the dome to track the trade. We're looking for 10 points of profit. We also look for, if it gets above 5 points, to move our stop to 5 points to guarantee at least 5 points of profit.
Yeah, so Fred, here's the dome. This is a demo dome that we're showing you from Infinity. So here's the dome. I have it positioned next to the chart, and I'm looking at my trade log, alerts log, and when I see a signal come on, as this one did, this is actually a signal to go short on a trend bias trade, I would just simply click sell market. And that sell market then puts the trade out there. And because I have auto checked with a profit target of 40 ticks and a protective stop of 80 ticks, take off auto center, my profit target is automatically inserted as soon as I open the trade, and my protective stop is automatically inserted when I open the trade. So it's one click to enter the trade and set my profit target and set my protective stop. And that was actually a valid entry there on the trend bias that came on at 8 o'clock. So we'll leave this out here and see if we get 10 points.
Move 4 1/4. Move 4 1/4 already?
Yeah, well,
just isn't bad for aftermarket.
Came on late, right? But the bar opened at 14 1/4. I actually have a favorable fill at 17 1/2. Mary, when you're saying, could you please show an option chart? If you're talking about the adaptive entry system, hopefully you saw me showing the Amazon chart and the S&P 500 chart. If you need something else, something that I didn't share, please let me know. Happy to do that.
Kevin, I'm sorry, I don't know what you're referring to when you're talking about if I would cover the max 20-point win and 20-point loss per day that I put together.
Maybe that's what you just talked about. That's the 20-point target. Here, 1250. We got down to 1250.
Wrong side.
I'm just pointing to it.
I thought you were going to lock in.
No. Well, I'm going to, but it hasn't. There we go. Oops. Now we're at 1250. So we just locked, for those of you who are just getting used to this, we just locked in 5 points of profit. And if the price continues to move lower, it'll hit our 10-point target, but it came back and took us out of 5 points of profit. 5 points, $20 a point. We have $100 of profit on that one trade. Well, Neil, this is not theoretical. These are $5,000 accounts, but we started this with the adaptive entry system and the personal trading plan, and combining the two for the purposes of our community. We started that back in July. So that's not all theoretical. This is actually taking the trades every day during the live trading room. Aaron and Michael are calling out the signals. This is not woulda, shoulda forecasting. You can follow right along in the live trading room. You can see every trade we take. You can see the detail of every trade. And if one of the three of us, record something incorrectly, you can see that. You know exactly what each trade produces. We've had people before say, did you take that as a 5 or a 10 pointer? Well, we explained, hey, we managed to lock in 5 points on that. Yes, it did go to 10, but we were out of 5. We try to present this as a very conservative approach.
Actually got a nice compliment earlier today because there was a trade that we took. It was a fractal break and it went above 5 points, but it broke the fractal and went above 5 points all in the same second, literal second. So it was impossible to lock in, and it ended up reversing and was a 20-point stop out. And so we got the question, where do you recording that? Well, it was a 20-point stop out. There was no way that you took any profit on that. And we even asked people that had a trailing stop if they got triggered, and they didn't. Someone else said, well, I had a limit order right at 5 points and I didn't even get triggered. And so there was just no way that anybody took profit on that. And so it obviously was a full stop out. So we recorded a 20-point loss, and we got a compliment that some people would have just said, well, that was 5 points, but we record what we can do. You'll hear Michael and I go, locked, never mind. We didn't get it in there in time. It came back too quickly. And so we record what we're trading.
Yeah, that's a really strong point, Aaron. Michael's saying, I love all the stats. It's exactly how I'm wired. I notice you don't have these kind of complete stats on other futures markets. The system was not developed for the NASDAQ 100, but that's where we started trading it extensively. We did most of our stress testing on the NASDAQ 100 and less stress testing on the S&P 500 futures and on the Russell 2000 futures. We're currently trading. This is not something that we are putting into a personal trading plan. It's not something that we are doing in the live trading room, but within our own proprietary trading team, we're currently trading NASDAQ, ES, RTY, copper. Sometimes we're trading oil, bonds. We have a variety of markets that we're trading, but there's a very practical limit to what we can present in the live trading room. So our objective in the live trading room is to offer an environment where you can come in and learn how to trade the adaptive entry system signals. And we use the NASDAQ 100 futures in order to help you learn exactly that. So if you're getting to a point where you're comfortable and you're trading NASDAQ 100 futures confidently, and you decide you'd rather trade RTY, or you'd rather trade copper, you'd rather trade bonds, you need to get familiar with those movements. You need to understand what your profit and loss target are. We invested literally hundreds, if not thousands of hours evaluating movements and deciding on a 10-point profit target with a 5-point lock-in and a 20-point protective stop. That produced for what we considered an optimum level of performance. So if you're going to trade something else, nothing wrong with that at all. You just got to spend the time getting familiar with those movements. For us, it was a capacity issue. We wanted to teach people how to use the system. We don't necessarily want to be the group that is telling you every trade to take. So we're using the NASDAQ 100 every trade during the day to teach you how to interpret the signals, when to get in, when to get out, and start to gain your own level of confidence and performance. Jay's asking, based on the stats of earnings, how much exponential growth one might achieve by using all their earnings as working trade capital? So they might increase week to week. You can study the personal trading plan. You can put in whatever parameters you want. You can reinvest all of your capital. You can grow to what I would consider to be an unreasonable number of contracts. You can set the risk limit from 10% to 100%, whatever you want. That's all flexible, something that you can adjust in the personal trading plan and do some of your own exploratory. Again, we want to provide an environment where you are set up to be successful, but we're not able to, nor I don't think we want to, provide every single detail of every single trade that you might choose to take, or every single index that everybody in our community might choose to trade. We're just not equipped to do that. We are focused on teaching, and we're focused on developing. And we're developing additional systems right now. We have another system called the Aurora system that I've been tracking and trading and testing since September. It's not ready for prime time yet, but it's producing some outstanding results. We have a development team of programmers working on building our auto trading tool, and then we would start by using that with our own proprietary trading team. So there's a lot that we have on our plate, but for those of you wishing to learn, the live trading room is the place to be. Michael and Aaron are really good at helping you understand which signals to take and why, how to read the charts, and then you can trade whatever you choose.
Bill's asking, are the live trading room recorded? We do not record the live trading room. It's from 8:45 to 4 p.m.
Yeah.
And there will be dead spots throughout it. And so we repeat ourselves so many times that even if you're not able to be there the entire day, there's still plenty of benefit of education that you can get from being in the live trading room. Jack, the position I mentioned about the fractal that broke and hit 5 points all in the same second, we were not in a trade before we entered that, so it was only one trade.
Kevin says, FYI, I've been sim trading since January 19th. I'm going live on Monday. One contract, he's averaging $170 of profit per day. That's outstanding, Kevin. That really is outstanding. Good luck with that. Let us know how we can help you with that.
Neil's asking a question we get a lot. Could you comment on the idea of a reward to risk ratio being 1 to 2? So that's making an assumption that all of our losing trades are 20-point stop outs, and that's just not what happens.
That's a very traditional way of thinking that really most people don't understand, and don't understand the specifics behind it. So Aaron's
today's
right.
not a great example because it was so volatile. We had more stop outs than usual, but I think Monday a little bit more normal.
Yeah, so here's a trade we lose 5.5 points on. We didn't lose 20. There's a couple we lost 20. There's one we lost 9 on. So that's really, in my opinion, Neil, the question isn't really relevant to what we do. It's a question that is based on people trying to teach or explain things that they don't really, it doesn't really pertain to all forms of trading. I think that's the best way I can answer that. So, and again, if you want to put some sort of a risk to reward ratio, 2 to 1, 3 to 1, 1 to 1 around it, you can certainly do that. I would invite you to do what we've done and invest the time of trading over several months to establish some sort of a historical run rate for yourself, to know what your parameters should be, what your profit target should be, what your stop loss should be. Here's a comment from Christian. So Christian is a longtime friend of our community here. And Christian just says, folks, I own currently multiple cell phone stores and a firearms company. I work at those businesses an average of 60 to 65 hours per week, and I want out. This is my ticket to more freedom. 50 hours per month? Oh my God. That's like a vacation for you, isn't it, Christian? So yeah, thank you for sharing that, Christian. That's really awesome. And Christian said, I would have given up years ago if it wasn't for the coaching over the years. And we really appreciate you, Christian, and appreciate you being here. Certainly appreciate your comments.
I just found out Christian's been profitable with his trading too. He trades while he works without having a working middle scroll mouse either to scroll up and down that dome. He's been using the arrows on the side. So it's possible, folks, even with a mouse that doesn't allow you full capabilities.
Now, Deepak's asking, what are options moneymaker, New Cycle Trading? What is offered by each company? They are separate companies. Options Moneymaker, we are an education company. We provide training and education on trading futures. We provide options trading education. New Cycle Trading is Options Moneymaker also hosts, is responsible for the live trading room. And New Cycle Trading is developing software, developed the adaptive entry system software, continues to explore and develop other systems and tools, and also is in the process of developing our auto trading software.
Bob's asking, suppose I am in a long trend bias trade and then we reach an upper fractal before exiting the trend bias trade for a profit or a loss. So upon reaching the fractal, am I then in two trades? Yes, if you're trading fractals, I highly recommend everyone starting out who is brand new to futures and brand new to AES to just start with AES and then add fractals, because you can absolutely be long on a fractal and not have reached your profit target or your stop yet, and then an AES signal comes on, or vice versa. It is very possible for that to happen, and you want to be able to, one, be familiar with your trading platform, know how to manage it, two, be comfortable with the AES signals, and then three, have practiced this in sim as well to know what you are going to do with being in two different trades, same direction, because they have to be the same direction, at the same time at two different fill prices. So there's a few options of how you can handle that. What Mark does is he generally cost averages them together, looks at the cost average price on his dome, and then chooses his 5-point lock based on that price. I like to treat mine separately, but you'll also hear Michael and I in the room say there's a tick difference between our 5-point locks. Just pick one. Either pick the 5 points or a 5 and a tick points, but just combine them together. You'll hear us say that together, that in the live trading room, because that's honestly the easiest way to treat it when they're so close together.
Well, and here's a good example of that. Here was a fractal at 13,305, the lower fractal right here. Here was a short trend bias signal that came on. And so you are short at 314.25. It moved down and it had not hit 10 points yet. So forget about the 5-point lock just for a minute. It had not hit 10 points yet, but it hit 305. So you would have been short at 305 on the fractal, and you would have been short at 314.25 on the trend bias trade. Now, they both ended up moving a total of 10 points, but each one of them would have exited at their own 10-point exit price. You can, as Aaron said, you can lock in 5 points on them separately. You can lock them in at 5 points on the net, the average, but it takes a little bit of experience to do that. So Aaron's right. Set up a sim dome for yourself and get yourself into a few of those situations and get comfortable with how to manage it.
He's saying I was in that situation today in sim, and managing the two trades was no problem. That's wonderful.
I like it when that happens.
It's exciting.
I don't know if you've ever talked about this, Aaron, but just in some of my own trading, if that happened, if I see that there is a fractal between me and 10 points, I will sometimes move my manually adjust my 10-point target out to be 10 points off of the fractal. I'll still lock in at 5. But if it continues to move and hits the fractal, then I have 2 trades that will close out at the 10 points off the fractal. So it's a way to give yourself a little bonus sometimes. But again, all of those things require some experience. And then because I have the chart here, I wanted to address Mary's question. How do you lose less than 20 if your stop is 20? Well, here's a perfect example right here. We're long on this trend bias trade, and we're in at 327.75. It only went up to 332.25. So let's say we didn't exit and the next bar opens white. We're out of that trade. We take the trade off. It's no longer valid to stay in a long trade. So we're long at 327.75 and the next bar opens at 326.25. We lose 1.5 points because the condition of the trade, condition of our trade changed, so we take the trade off. In that case, we lose 1.5 points. We don't lose 20 points.
Another example would be momentums. It happens sometimes on momentums because they're generally counter trend trades. So if we're in a counter trend trade on a momentum, I didn't see one as an example visually, but if we're in a counter trend trade on a momentum, and then let's say the next bar, a trend aligned trade comes on, such as a long consensus, we're going to abandon the counter trend trade and align ourselves with the trend.
And these are all the types of things that you learned in the live trading room and also through the training that we provide.
Neil saying, with the fractal trade, is there an entry right at the fractal value, or is there an X tick buffer away from the fractal? Everything that we trade and track is based on placing it exactly at the high or the low of the fractal. So the high of the bar for an upper fractal or the low of the bar for a lower fractal. There is no buffer that we use.
Bob saying, is the cost of Infinity Futures round trip $8 per contract? You should talk to them about the price, but generally it should be somewhere around $4 round trip. Jay says, seems to be a great system of learning with a SLAM and AES program for continual guidance. I'm in. That's awesome, Jay. Just let us know how we can help you. You can't have a better teacher than Erin in the live trading room. She's really good about explaining. She understands the system intimately. She can tell you how to anticipate what signal might be coming so that you can be prepared with your trade and you can optimize your entry. Just listen to Erin and she'll guide you to the best possible success you could have. Can't guarantee you're going to win on every trade. You certainly can't guarantee you're going to win every day, but if you stay the course and you set aside the emotions and just follow the signals, what we have found is there's really no reason you can't be successful with this. Tom's asking, do you take the trade off when the bar opens white or just turns white at any moment? When the bar opens white, we take the trade off. If the bar turns white mid-bar, we will evaluate other factors like the lower indicators, and we may adjust our stop from 20 points to 10 points. We also use fractals as stops. So if we get into a trade and we see that by using the most recent fractal, we can have a stop that is less than 20 points, we'll use that. But you know, you'll see some real-time examples when Erin is trading in the live trading room of when to adjust.
We talk through it all. We warn you if we're in a trade and we think that we're going to have a closing signal at the beginning of the next bar, we will let you know. So if we're in a trend bias and it's not being productive, we'll say if the next bar opens white, we are exiting the trade, and next bar opens white, we'll say, okay, we've exited the trade.
Erin, Bob has given me a challenge.
Oh boy.
Bob says the only indicator he's not fond of is momentum
Oh,
because
this is
it's
my
counter trend.
favorite.
Is there a way to show all trades and fractals except momentum?
How about we just show momentum, but take off the profit target?
Okay, so
Well,
Aaron's,
and I think we can, but I think
Yeah.
you should, this will also,
it's easy to develop a perception, Bob, that is not really connected to data reality. So you want me to show momentum first?
yeah. And then I think, so you can see, there's not as many trades per day on momentum because we always prioritize the trend aligned trades. So you can see the average amount of trades is about 4.5 per day. And you can see the daily average is $132. So it's a profitable
Profitable
signal.
strategy, yeah. And keep in mind that whenever we're in a trend, every trend has some sort of retracement to it before it continues. Every trend has pullbacks. Trends don't go straight up and they don't go straight down. So,
That last momentum. Yeah.
here's a short trend and here's a reversal. Here's a momentum, a counter trend signal that provided a really nice profit. So I like momentum signals. Here's another one. Look at this long trend started right here, kept going up here, but in the midst of it, there was a counter trend momentum signal that gave us a really nice profit opportunity, and then it continued to move higher. So momentums were specifically designed to capture those retracements.
I
Right?
changed it on the, does it show up for you?
It shows
Yeah,
no.
no M, so it's no momentum.
Oh, you can do that. So it's everything except momentum.
Correct.
Yes, from 8:45 to 4. So there's your answer, Bob.
Except it's not including fractals, but
Yeah.
but
So it's
here. One more. So you can, so this is no momentum, no fractals. And then there's another drop down that says no M and F on the drop down, and that will include
Oh,
fractals.
am I doing that?
Oh yeah, I can, but it's like the last one.
Oh, there you go. So there you go. Aaron's just done a brilliant job of designing this tool for us. So if you skip all the momentum signals, you take the fractals, you take the trend bias, the continuation, the consensus, 8:45 to 4 for the last 174 trading days is averaging about $759 a day per contract.
Pretty cool feature, isn't it?
It's awesome. I think you. All right, Mary, thank you. Thank you for being here. Fred's saying if you're only in the trading room, do the charts show without the signals?
Now, what Mark is showing or has been showing is exactly what we show you in the live trading room.
Mm-hmm.
You will see the signals, you will see the alert log. Okay, that's exactly what we show you in the room. We have ES and RTY up, but
Well, we may change that. We may just expand NQ and leave the others off to the side for now.
But we show you the NQ chart with all the signals, with the Cycle Finder Plus, the AO, and the profit flow oscillator below it, and then the alert log as well, which comes on anytime there is a signal, but they're only valid if it comes on within the first 3 seconds of the open of a 5-minute price bar.
Bob said nice work on the spreadsheet, Aaron.
Thank
Bob,
you.
it started with a legal pad.
It did. Mark's brainchild, and then
I had a concept.
You did.
And
You
I
had a great
talked to Aaron
concept.
about it. I talked to Aaron about it because she is the genius behind, building it, building the automation in Excel. And she said, all right, well, that sounds pretty cool. Send me what you have. So I hung up with her. I walked over to my scanner and I scanned in the 3 or 4 yellow legal pad pages that I had been jotting everything on and sent it to her. And I think I got some sort of a rude response when I sent them to you, but
I had to read your handwriting.
yeah, so she had the last laugh though. She puts it in the very first format of what we have today and she sends it back to me. Actually made it look like a yellow legal pad. She's quite the comedic genius.
Took a lot of time too. I could have been more productive with my day, but I was so determined,
You were determined.
to do that. Yep.
She did a fantastic job. This tool has helped us know how to move forward, know what to focus on. That's why Erin's focusing on the 20-point profit target every day. She just showed you, 174 days, 9 losing days. It helps us help you. If you're brand new and you go, I don't know where to start, I don't know what my profit target should be, we can help you understanding the hours that you're trading, the signals that you want to trade, like Bob was just asking, what is it excluding momentums, and we can start you moving in the right direction.
I mean, speaking of which, I added a new feature this week.
Yes, you did.
I wanted to see, let's change it to something. Here, I'll change it. You stay on that page.
Okay. All right, we're just about coming to an end here. Christian says 20 points is the sweet spot, then just add more contracts as the account grows. I'm 100% in favor of that. There's always this yin and yang between should I go for more points or should I go for more contracts? And points, if you're comfortable in achieving the point production that you've been achieving, just add more contracts. Let your personal trading plan scale you.
So the feature I added this week, someone had requested it, and I thought it would take me longer, but it ended up just taking me a day. You can see on today's line for the 848.5 to 4, we closed with 21.5 points. But over to the right of that, it shows that the actual biggest profit on the day was 45 points. And the point where you were down the most was just 10 points today, which means there was just a lot of back and forth mostly. But at one point you were up 45 points. And we also looked at, because we were curious what happens if you stop at that 20-point profit target. And we were looking, well, how much was the drawdown before you hit 20 points? And you can see yesterday, there wasn't one. You were positive since the first trade and you never went negative. You had 5 points. Day before that, you were down 12.25 before you ended up 22.75. And so that was just a little bit of a feature we added.
Nicely done, Erin.
Thanks.
Neil, when you say buy the spreadsheet, the trading or the tracking tool here that we're talking about is not something that we make available. It's something we talk about and we share in the live trading room. But this is a very robust tool that we're building for ourselves, and we can share data with you. The tool that we do sell is the personal trading plan. TJ, that's generally the range I'm in. When I'm trading options, I'm looking for at the money down to a 40 delta, but a lot of it's going to depend on what the cost is of the option and how much I'm willing to commit capital to the trade. And if trading a 50 or 40 delta is going to be beyond my desire to commit capital, then I may go down to as low as a 10 delta. In more volatile periods, I've traded 10 deltas and done very, very well with that. Christian, don't. Oh, Christian's becoming an advocate for Erin. I think he always has been. But Bill says, when you say points, you're referring to ticks. When I say points, I'm not referring to ticks. There are 4 ticks in every point. So when we took 20 points of profit here, that is actually 80 ticks. And the dollar value is $20 per point. So I'm not talking about ticks, I'm talking about points.
It's easier math than the $5 per tick.
Yeah. Bob, all of the adaptive entry system indicators are inclusive of multiple technical indicators that are commonly known and commonly used, but we've spent literally years pairing together different indicators and finding the right combinations of indicators and timeframes, and we make them look really simple. I mean, we build a oscillator here that's got a ton of data built behind it, but we very simply want to say, if it's blue, go long. If it's red, go short. We didn't want a lot of complication. I look at some traders' charts. There must be 50 different indicators on the chart. I don't even know how you can visually scan it and interpret what to do at any point in time. So that's true with the Cycle Finder Plus. There are a variety of technical indicators, and we presented it as a visual that very simply says when the blue line crosses the red line, you're likely to go short, and when the blue line crosses the red line, sorry, down, you're likely to go short, and when the blue line crosses up above the red line, you're likely to go long. We wanted to make it as simple as possible because when we're trading futures, time is of the essence. We don't want to sit there and study for 5-10 seconds what the signal was that just presented itself. We want a very, very simple visual, and that's what we have. We have these vertical visuals. When that comes on, go short, red. When that comes on, go long, green. All right, Jay, thank you. Thank you for saying that. And Christian, the last question goes to Christian, and then we're going to close out. Christian, can you pull info on the 9:30 to 12? You already have it, Aaron?
Yeah.
That's all plus fractals 9:30 to 12. Winning days?
Well, everything but 27 of them. Just because the losing days are on there. So that's 147 out of 174.
Yeah, you have 27 losing days out of 174, Christian. Okay. Hey, Bill, thank you for that. Appreciate your comments on the system. Look forward to seeing you tomorrow. Aaron will be in the live trading room tomorrow. That's right, Neil. That particular combination of factors has about an 87% win rate.
Let me change one more thing on that. So
Sure.
I had looked at quite a few things. And so 20 points here. The daily average is $227, which in terms of points, which is how my brain works a little bit more, is about 11.39.
Mhm.
So 15, if your target is 15 in that time frame, your average is 10.15. So you're averaging only about a point, a little over a point more to try to get 5 points more. So we talked about this a little bit in the live trading room, that if you're starting at 9:30, 15 points seems to be a better sweet spot. And of course, if you want the 20 points, then I would just encourage a scaling of contracts instead, to get you really, maybe you're looking for 10 and you take 2 contracts to get you to 20. But we found that 15's, in my mind, makes a little bit more sense logically. And there's a little bit less losing days too.
So what Aaron's just demonstrated, and then we're going to close out here, is the fact that we have all this historical trading data, and this is trading every single signal, every single day, for the last 174 trading days. It allows us to look at different time frames, trading from 9:30 to noon. You know, we've had people in the past that have asked us, can you look at just trading from 8 to 10 or 8 to 9:30? We can do all that. And you know, Aaron just did a brilliant job of designing this, and then she worked in the feature that says, well, what if I just wanted a 20-point target or a 15-point target? You can see what those results are. So we're going to continue to evolve this, and we're going to continue to help you get on the right track for your personal trading. Okay, we're going to go ahead and close out now. But Aaron, thank you so much, and thank you everybody for being here. Appreciate you investing some time with us, and we'll be back 8:45 a.m. for the live trading room.